Our trade on Eos Energy Enterprises just made over 2,900% profit, turning every $27 call option into $800 after the stock soared to a new high. If you're not in our membership and missed it, don't worry, because in this video, we'll show you the strategy we used to enter this trade early, the signal we followed, and how you can apply the same approach to catch big opportunities like this in the future. And if you're already profitable in this trade, we'll also show you how we updated our position after detecting another unusual trade worth $1.9 million, using a strategy to protect profits and make the trade basically risk-free, setting us up for more potential gains with no additional capital at risk. But here's the thing, to set this up successfully, you need to position early, just like the wealthy investor we've been tracking, the one who led us to this winning trade. About a month ago, on this day, September 2nd, we detected unusual option activity on Eos Energy stock, giving us a bullish signal that the stock would most likely move higher, which it did. So we got in early along with our members and rode this big move all the way up to a new high. As you can see, the stock has gained around 169%, more than doubled ever since our first trade entry. That's how the rich keep getting richer. They somehow know when to get in at the right time in the right stocks. And it shows exactly why we keep tracking their trades. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on September 2nd. And so we analyzed those unusual options being traded in EOS Energy stock, ticker symbol EOSE, and went long bullish when the stock was trading around $7 per share. And now it's trading around $18 per share. So even if you traded the stock instead of options, it's already highly profitable. So if you want to start getting access to the deeper insights that lead to profitable trades, including these email alerts, consider joining the membership on our website. We'll link it up here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to use a smart risk management strategy and set up our next trade based on the latest data from unusual option activity. So let's take a closer look at our trade, the same one made by this wealthy investor. These October 17th options at the 10 strike calls. At the time, this investor bought 6,800 contracts at a price of $27 each. Keep in mind that since options prices are shown here and each option contract controls 100 shares of stock, to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $27. So how much are they worth now? Well, let's check the option chain for these October 17th options at the 10 strike calls. As we can see here, these contracts are now worth between a bid-ask price of $770 to $840 compared to just $27 when we first detected and bought these contracts about a month ago. That's why it turned into such a profitable trade now. So how much return on investment did this deliver? Well, let's take a look at our original analysis using the risk profile graph focusing on these October 17th options at the 10 strike calls, which were priced at $27 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see in the blue line that if the stock had dropped down, it would have been a negative $27 loss per contract, the entire cost of the trade when we entered. But instead, it went up higher to about here. So we have a profit of $800 per contract. And so to calculate the profit percentage, we take the profit of $800 and divide it by the initial cost of $27 and then multiply by 100 to express it as a percentage, and that gives us a return of 2,962% profit in just 1 month. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have more access to exclusive research and information, sometimes even leaked insider information that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. Nobody wins on every trade. That's just the practical reality of trading. But just one of these winning trades like this can offset several losing trades and drive long-term growth, making a significant impact on our overall net profitability. For example, even if we lost 20 trades in a row, a total of 2,000% in losses, since each trade is capped at 100%, we would still be positive overall, up by a 962% net gain, thanks to just one winning trade like this. Now, if you've been following our work, you know that we do not lose that many times in a row. In fact, it's usually the opposite because we win a lot more trades. But the point is this: many people pay too much attention to win-loss ratios. What really matters is not how often you win, it's how much you make when you do win. Maximizing gains on winning trades and minimizing losses on losing trades has a far bigger impact on your bottom line than chasing a perfect win rate. That's the edge we focus on. And so, to stay consistently profitable over the long run, we use strategies with a better risk-to-reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to adjust our trade here, turning it into a strategy that gives us more upside potential while managing risk to reduce possible losses. And so we closed out of our 10 strike calls by selling them, locking in profits, and rolled into a new unusual trade we just detected. As we can see here on the options time and sales tape, there was unusual option activity on October 15th at 9:45 and 9:51 a.m. in these November 14th options at the 20 strike calls. Thousands of contracts were traded at roughly the same price of $200 per contract. And so, to calculate the total cost of this unusual trade, we multiply this price per contract by the total number of contracts traded. Since two transactions were made for the same options, we add the quantities 4,999 plus 4,983, which equals a total quantity of 9,982 contracts. And so we multiply this total number of contracts by the price per contract, about $200, and this equals a total trade cost of approximately $1.9 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Now, with that said, even though this trade carries higher risk, we still took it, but only because we locked in profits from our original trade by using an options rolling strategy to reduce exposure and manage risk. So let's go over exactly how we did this. As we can see here on the option chain, we rolled into this new trade at a higher strike price and a later expiration date, matching the activity we saw on the options time and sales tape, these November 14th options at the 20 strike calls. As we can see here, our new position is marked as POS with the green color indicating a buy position. So we used the profits from our earlier trade to buy these 20 strike calls, which cost less than the amount we sold our original trade for at the 10 strike calls. That means we entered this new trade at a credit, not a debit, reducing our risk by using only the gains from our earlier trade. And so when we analyze our trade now, we can see here on the risk profile graph, the buy position cancels out the sell position because they are the same October 17th options at the 10 strike calls. So we are just left with the 20 strike calls that expire November 14th. And so on the graph, we can see that if Eos Energy stock drops from where it is now, or even crashes, our trade would not have any negative loss. It will always stay positive because we've locked in more profits than the cost of our new trade. This is how we manage risk, by minimizing losses, and in this case, we completely eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But keep in mind, this risk-free strategy was only possible because we followed that wealthy investor early, back on this day, before the stock surged over 100% to a new high, giving us 2,962% profit in just 1 month. So if you want to get access to our strategies backed by our deep analysis and trade alerts, just like this one, where a well-informed investor entered this options trade early before the stock took off, then sign up on our website. We'll link it here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.